So today we're diving into one of the most critical and honestly one of the most overlooked parts of a hotel's financial health, working capital. This isn't about long-term profit or 5-year plans. No, this is about the here and now. It's the cash that covers your payroll this week, pays your food suppliers tomorrow, and keeps the kitchen stocked. It's what literally keeps the lights on.
All right, let's just jump right in with a tough question, and I want you to really think about it. If, for whatever reason, every single booking just stopped tomorrow, could your hotel make it for 60 days, for 2 whole months? How you answer that question tells you everything you need to know about your liquidity and your financial toughness. You know, the easiest way to wrap your head around this whole topic is with an analogy we're going to keep coming back to. I want you to think of your hotel as this incredible high-performance car. The beautiful building, the amazing staff, the fantastic service, that's all part of the engine. But working capital, that's the fuel in the tank. And it doesn't matter how powerful that engine is. Without fuel, you're not going anywhere. Okay, so let's pop the hood and get a little more specific. What exactly is this financial fuel we're talking about? What are we really measuring?
At its heart, working capital is actually pretty simple. It's just the difference between your short-term assets, things like cash you have on hand and inventory, and your short-term liabilities, which are basically all the bills you need to pay pretty soon. Think of it as a quick, clear snapshot of your hotel's ability to handle its immediate financial needs.
And the math here, it's not some crazy complex algebra. You just take all your current assets and you subtract your current liabilities. If you get a positive number, great. That means you've got enough fuel in the tank to cover your upcoming bills. But a negative number? Well, that's the little red warning light flashing on your dashboard, telling you you're running on fumes.
Okay, so if that's the formula, what exactly are we plugging into it? In a hotel, what counts as an asset and what counts as a liability? Let's look at what's filling the tank versus what's draining it day in and day out. So let's break this down. The fuel inside your assets isn't just the cash in the register. It's also the money that online travel agencies or corporate clients owe you. It's your entire inventory of food, drinks, and linens. Now, the fuel outside has the usual suspects: bills, payroll, taxes. But there's a really tricky one for hotels: deferred revenues. That's the cash you got from a booking that hasn't happened yet. It feels like your money, but technically it's a liability until that guest checks out. Now, managing all this would be a whole lot easier if the road was always smooth and straight. But as we know, the hospitality industry has its own unique potholes and sudden turns that can drain that fuel tank when you least expect it. Let's talk about some of the biggest challenges on this road. First up, the big one: seasonality. It's the classic feast or famine situation, right? During peak season, cash is just pouring in, your fuel tank is overflowing. The real trick is making that fuel last through the long, quiet off-season when you're still burning through cash just to keep the place running. And that leads right into challenge number 2, those painfully high fixed costs. These are like a slow, constant leak in your fuel tank. It doesn't matter if you've got one guest or a full house. You're still paying for the lights, the heating, the elevator maintenance, the management fees. They just don't go away in the slow months. Oh, this one is such a massive trap. You can have fantastic sales numbers, look super profitable on paper, but a sale is not cash in the bank. When a big corporate client or an OTA takes 30, 60, sometimes even 90 days to pay you, it creates this huge gap. It's like having a voucher for a full tank of gas, but your car is sitting on the side of the road, totally empty right now. And finally, there's the risk that's just sitting there, hiding in your storerooms and walk-in coolers. All that food and beverage stock, that's cash you've already spent. And if that fresh fish or expensive produce doesn't sell in time, it spoils. And that's not just a missed sale. It's a total loss of the cash you used to buy it. It's literally like pouring fuel directly on the ground. Okay, so we've established the road is bumpy and full of hazards. But here's the good news. A smart driver has a dashboard and a toolkit to navigate these things. So what can you, as a manager, actively do to control your liquidity and keep that engine humming along?
So how do you stay in the driver's seat? It really comes down to 4 key things. First, forecasting your cash flow helps you see the dips and hills in the road up ahead. Second, negotiating payment terms on both sides lets you control the timing, getting your fuel in faster while slowing down how fast it goes out. Third, optimizing your inventory stops you from letting cash just sit on a shelf. And finally, you have to constantly, and I mean constantly, monitor your dashboard, those key metrics that tell you what's happening in real time. And these are 3 of the most important gauges on that dashboard. The current ratio, that's your main fuel gauge. It tells you flat out if you have enough in the tank to cover your immediate bills. Then you have days sales outstanding, or DSO. This basically measures how fast you collect the money you're owed. A high DSO means your cash is sitting in your client's bank accounts instead of yours. And finally, inventory turnover tells you how efficiently you're using the cash tied up in your stock. A high number here is good. It means your inventory is working hard for you.
All right, let's bring this all home. As we've seen, this isn't some abstract accounting exercise. We're not just talking about numbers on a spreadsheet. We're talking about the fundamental, day-to-day survival of your entire operation.
And if you take away only one thing from our conversation today, please let it be this. A hotel can be fully booked. It can have glowing 5-star reviews and be hitting record revenues. But if it can't find the cash to make payroll or pay its food supplier, that success is just an illusion. Profit on paper means absolutely nothing if the engine seizes up from a lack of fuel.
This quote just says it all perfectly. Managing working capital isn't just some task you hand off to the finance department. No, it's a core operational duty for every single leader in the building because it is, quite simply, the key to survival.
So, we'll end right where we started, with a question for you to take back with you. I want you to look past the occupancy rates and the fancy revenue reports. Take a good, hard look at your own financial dashboard and ask yourself, honestly, how much fuel is really in your tank?